Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. We had two patterns here, two completed patterns that had been the main influence on this market since as far back as summer. The first pattern is an overextension of the bright red neckline, currently at 456.5, the May to August 2025 head and shoulders pattern. This is a less common head and shoulders continuation pattern. The previously mentioned bright red neckline also shows up in the second pattern. In this case, it acts as a lower trend line with the nearby bright green upper trend line, which is currently at 464.25, that together formed a shallow July to October descending wedge pattern. And this pattern is very shallow and consequently narrows at quite a slow rate. Plus, it would not reach an apex until early next year. However, as I said 4 weeks ago, and I quote, "Do not expect the market to wait till then, nor expect the market to make a clean break, as the chances of a false break are now quite high, so caution." End of quote. That all being said, we had a break higher 3 weeks ago, a good break higher. And as I said 3 weeks ago, and I quote, "I feel obliged to lay out, if not targets yet, then potentials. Thus, the primary potential would be in the 489.75 area, with a secondary harder to reach potential up in the 502 even area. Of course, if this becomes a false break on the upside, then I will retire these potentials in a heartbeat." End of quote. 2 weeks ago, I solidified those potentials into target X at 489.75 and target X1 up at 502 even. Since late October, we have seen prices move up and away from this descending wedge pattern, but also get caught between the mauve medium moving average, below, currently at 475.5, and further up on top by the declining gold long moving average, currently 479.75, which isn't that far up above, plus the dark blue neckline extension to the August to September 2024 reverse head and shoulders pattern, currently at 483. I said 2 weeks ago, and I quote, "Pushing above the gold long moving average, and especially the dark blue neckline extension, will be key to any attempt higher. However, if prices stabilize below the mauve medium moving average, then the pressure will be to try and push back down to the bright green trend line, upper trend line." End of quote. One further key factor to consider is that we had a monthly key reversal up for October, though this seems not to be affecting the market too much at this time. Winnipeg Canola. The key recent pattern here had been the fairly obvious bright red late June to late October bear channel, which is currently 567.90 to 614.30. 6 weeks ago, prices spiked down to the May 23 low at 611.10 within this bright red bear channel. But they bounced up from there. Initially, not by far, as it seemed the pattern came to it rather than the market moving to the pattern. But it did lead prices and testing and finally breaking 2 weeks ago the bright red upper bear channel line, and also pushing up over the 2021 low at 629.5, plus the lesser Fibonacci line at 632.90, and challenging and seemingly this week starting to stabilize over the bright green declining short medium moving average, which is currently at 636.10. Thus, we ended up and out of the bear channel, though we haven't gone that far given the strength seen in heading lower. Thus, looking above, we have the 50% Fibonacci line for the whole 2025 move at 655.70, which ties in with the June 2021 low at 655.90. And above that, we have the really flatlining gold long moving average, currently 663.10, and the declining mauve medium moving average, currently 662.80. That's come down to meet that gold long moving average. Beyond that, we have the dark blue neckline, the earlier mid-April to mid-August head and shoulders top. It's currently at 679.20. This head and shoulders top pattern is a complex head and shoulders top pattern, a really ragged one as well, with a break lower back in mid-August and a given primary target down in the 630-80 zone and a secondary harder to reach target down in the 585.5 zone, which I have since retired. Thus, as I have said 2 weeks ago, and I quote, this just now leaves us with potentials topside for the breakout of the bear channel. Now the following are potentials, not targets, as it's still too early for targets, but a primary potential will be up in the 680 and 3/4 area, with a secondary harder to reach potential up in the 720.5 area, and the tertiary much harder to reach potential up in the 751.90 area. As I said, these are at the moment not targets for the pattern, just potentials. Well, this week I've decided, for now at least, to solidify some of them into targets. So a primary target X in the 680 and 3/4, and a secondary harder to reach target X1 up in the 720.5 area. Bursa Malaysia crude palm oil. To start with, as I've done for many months now, I'd like to the wide congestion that's overhead between 44.08 to 45.59. We tried in mid-October to pierce and failed, with prices 2 weeks ago punching down through the lower edge of this congestion, as well as the short medium moving average, currently for 43.45, the gold long moving average, currently 42.74, and the mauve medium moving average, currently 42.91. Prices also dropped down for a wide congestion band made up from the 38.2% Fibonacci line of the May 20 to March 22 move and the 50% Fibonacci line of the May 23 to December 24 move, both at the same 42.74 level, along with the 38.2% Fibonacci line of the July 19 to March 22 move, slightly lower down at 42.39, and finally the July 23 high a little bit further down at 41.89. Now the recent overall pattern here had been the broken bright red May to September bull channel, and now has been superseded by the dark blue mid-August to early October bearish Andrews pitchfork. Dark blue bearish Andrews pitchfork, for which the lower time, currently at 40.14, has last week and early this week been exceptional at showing the slowly declining support. Thus, in the bigger overall picture, if we look at the whole August to day action as a possible double or even a triple double or triple top, then as I said 2 weeks ago, and I quote, we have potential still available down to a primary target X in the 41.18 zone and a secondary harder to reach target X1 down in the 39.40 zone, end of quote. The primary potential and target was achieved last week, but it still leaves a secondary harder to achieve potential and target X1 still available at 39.40. More on why this will be harder to reach shortly. As I said 2 weeks ago, and again quote, another feature to watch out for is that we are set up already for a possible monthly key reversal. Thus, if prices close tomorrow night either over 43.47, or under 43.24, then we're beyond. Anything in between would have a lesser outside month pattern. Right now we are looking at a monthly key reversal down. In truth, and that's the end of the quote, in truth, October ended up as a monthly key reversal down, a feature that ought not to be ignored. Though the last couple of weeks have seen the market trying to do just that. Now, the reason I suspect for the stalling and lack of meaningful follow through lower is not only due to the dark blue lower time, but also to another band of congestion below, between the February 2011 high at 39.53 and the lesser Fibonacci line at 40.26. Now, to be honest, this is not that powerful a congestion, but it seems enough for now, hence the stalling ahead of target X1. Now, there's one other feature I'd like to discuss, something I've already mentioned since June. This all came about because it was at the end of June, speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. I've also recently spoken about it in the 28th World Ethanol and Biofuels Conference in Brussels this month. It was and is to watch out for a key level from now until the end of this year, and that level is 35.99. I've prefaced this by saying, and I quote, I know that is quite a way below the market, but still nevertheless it is important, end of quote. We are a lot closer to that level highlighted on my daily chart in a black line box than we were in mid-October, and that is why it's important. You see, if prices push down below $35.99 before the end of this year, which even now is possible, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge long-term pattern may bring. Please watch out for this, as it is important, and I will bring you more details should we get down below there, even though I know as we are today still a few hundred ringgits above it. Just please bear it in mind as we still have some time left of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.